Okay, recording started. Recording started. I am now flashing the financial statement analysis for finance companies PowerPoint presentation. Okay, finance companies. What are finance companies? What are finance companies? Finance companies, a finance company is a type of non-bank banks, NBBs. Okay? Non-bank banks. These are banks, but not really. Okay? These are banks, but not really. So, finance companies are non-bank banks. They are banks, but not really. Okay? Sort of banks, but not really. Why are they considered banks, but not really? Okay? What's a bank? A bank basically has three functions, and I will name two of them. Number one, take deposits, and number two, grant loans. Tama? Banks, they take deposits and they also grant loans. So, when it comes to banks, they take deposits and grant loans in addition to creating money in the economy. So, these two are functions of banks. Now, what if there is a company who does only one of them? Okay? They are called NBBs. NBBs, they only do one function. A non-bank bank is a bank that doesn't have the full authority of a bank. Okay? Kaya siya non-bank, although banko siya. Confused? Okay. Huwag kayo ma-confuse. A non-bank bank is a bank, but not really. It is a company that is either only taking deposits or granting loans. Banks, they do both. A non-bank bank is an institution that only does one. Okay? What is a finance company? What is a finance company? A finance company is a company that only grant loans. A finance company is a company that only grant loans. Okay? I hope we are clear about that. Okay lang kayo? Sige, ganito. Next meeting, ready kayo ha? Magkakaroon tayo ng Netflix party. Okay ba? Manonood tayo ng film, no? So next meeting, we will have a film viewing. Finance companies. Finance companies only grant loans. They only grant loans. A finance company does not take deposits. They only grant loans. Lending, but they do not take deposits. Okay? Now, what are the types of finance companies? Again, a finance company is like a bank. It grants loans. However, it doesn't take in deposits. Okay? According to who the customers are, these are the types of finance companies. Okay? Types of finance companies according to who the customers are. First, we have consumer finance companies. We have consumer finance companies. What is a consumer finance company? It is a finance company where the customer is the ordinary person, the consumer. Okay? When I say ordinary person, someone who just wants to buy a house, someone who wants to buy a car, someone who wants to buy an appliance. Okay? So, consumer finance companies, the customers are the consumers. Okay? What are the different consumer finance companies? They include auto loans, An auto loan, sorry, excuse me. An auto loan company is one that may help you to finance your car or vehicle purchase. Car or vehicle purchase. Bibili kayo ng kotse, bibili kayo ng motor. Okay? Buy a car, buy a motorcycle, buy your own car, sedan, pickup trucks for your own consumptions. Auto loan finance companies can help you. Assuming ayaw sa inyo ng bangko, no? Sometimes the bank doesn't grant credit to you because they do not believe in you. Okay? Except sa inyo, alam ko mayaman kayo, no? But for some people, the banks do not grant credit to them. Okay ba? Sige. So, auto loans are the auto loan finance companies are where they are going to resort to. Okay? Please search, Google nyo ha. Toyota Finance. Toyota Finance. Google nyo. Toyota Finance. Okay. Sir, bakit ganun? Toyota siya pero finance. Okay? Di ba Toyota kotse? Tama ba? Isn't Toyota a car company? Yeah, that's true. But aside from offering cars, they also have a finance company so that the customer will have the option of borrowing from Toyota Finance in order to purchase the car. Okay? Auto loan finance companies help consumers finance a car or a vehicle purchase. Number two, we also have home mortgages. Number two, we also have home mortgages. In a home mortgage, this is a borrowing where the collateral is real estate property, your house or condominium. Home mortgage, the collateral is a real estate property. The collateral is a real estate property, land, house and lot, condominium. That's home mortgage. Okay? There are finance companies who offer home mortgages. Okay, home mortgages. A home mortgage can be borrowed, okay? If you are a consumer who want to buy a house, you may borrow from a bank, or if you are not qualified in the bank, you resort to home mortgage companies. Now, if this is the first mortgage, we call it the first mortgage. Literally, ha? The first mortgage is called the first mortgage. Now, for example, you bought the house for 10 million. Okay? Let's be realistic. Let's say 12.5 million. Let's say the value of the house is 12.5 million. Usually, they would require that you would pay a percentage amount. Okay? Just to make sure, no, may pambayad kayo, no? A percentage amount, say 20%. And the remaining value, usually 80%, you may borrow from banks or finance companies. This is the first mortgage, the 80%, that's 10 million, right? Correct me if I'm wrong. That's around 10 million for 12.5 million. 80% is around 10 million. So if this is the first time, that would be called the first mortgage. Now, once you get the house and you still want to borrow more money, you can actually take a second mortgage. For example, the value of the house went up to 30 million. Okay, tumira ka dito ng 5 taon. You stayed in the house for 5 years. And after that, the value of the house became 30 million. Now, pwede ka pa ba manghiram? Yeah. You can still borrow. In order to have additional funding. Okay? That's a second mortgage. Okay? Also known as a piggy bank. Not piggy bank. Piggy ride mortgage. Let me check. It's piggy something mortgage. Okay? So that's a home mortgage. So I repeat, the first mortgage is literally called first mortgage. When you buy the house, a percentage of that amount you may borrow. Now, if the value of the house went up, you may add another borrowing, which we call ang tawag dyan ay second mortgage. Okay? So may first mortgage, pwede pang mag-second mortgage. Okay? So, next, let's go to number 3, consumer durables. Consumer durables. A consumer durable finance company helps consumers fund their need for appliances and furniture. Okay, go to a appliance or furniture company, no? Go to a store of appliances or furniture, no? Go to SM, go to an Ayala Mall, there's an appliance or furniture store. Now, you might notice in the counter, in the cashier, there is an advertisement for home credit. Napansin niyo yun? Okay, search niyo yun, home credit. Okay? So, why is home credit in the picture? because they are going to offer the customers loans. Example, if the customer has no credit history or has poor credit history, hindi siya qualified mangutang sa credit card. Imagine yung customer, wala siyang credit card. Okay, kanino siya lalapit? Siyempre, lalapit siya sa consumer durables finance companies. So, if the finance company's customer is a consumer, usually it is either an auto loan company, auto loan finance company, home mortgage finance company, or consumer durables company, finance company, sorry, depending on what products they are actually financing. Okay? Do you have any questions? Do you have any questions? According to who the customers are, letter B, what if the customers are not people, they are not individuals, but businesses? Okay? What if the customer is a corporation, a company with a business? So there are business finance companies who are going to cater the financing needs of companies. Okay? Business finance companies who will cater the needs of the business companies. Okay. Number 1, we have a floor plan inventory type. This is to finance an inventory for a business with the floor of inventory as the collateral. Okay? So sa isang negosyo, may inventaryo. No? Businesses own inventory. Okay? Merchandisers and manufacturers, at least they are. Manufacturers and merchandisers, they own inventory. A floor plan inventory, they finance an inventory for a business with the floor of inventory as the collateral. With the floor of inventory as the collateral. Example, this is a car dealership. Okay? Now, this car dealership, they need to fund the purchase of the car. Siyempre, mga yan, bumibili yan ng kotse. Yang mga yan, bumibili yan ng kotse, tapos binebenta nila. Tama? Okay. Paano kung walang pondo? Anong gagawin nila pambili ng kotse? What if they don't have readily available funds? The owners do not have the funds. They may borrow from a business finance company through a floor plan inventory. Finance an inventory for a business with the floor, okay, dililinis niya yung floor, of inventory as the collateral. So, anong collateral? Yung floor kasama yung inventory. Okay? O, auto dealer tayo. Let's say we're an auto dealer. Oh, wala na tayong pambili ng kotse. Ano ibebenta natin? Alam ko na. Mangutang muna tayo, floor plan inventory. We are going to borrow a floor plan via floor plan inventory to fund our need to purchase cars. Okay? Finance an inventory for a business with the floor of inventory as the collateral. Leasing, especially in tracking. Okay, you need a truck. Okay, sometimes it's better not to own the truck. Kasi pag mag-own kayo ng truck, you would have to do the maintenance. If you own a truck, you have to do your own maintenance. Rather than borrowing money in order to buy a truck, one of the best things to do is to rent a truck. Borrow the truck instead. Okay? Because from whoever you are going to borrow, they know how to maintain the truck. No? Paano kung nasiraan? No? At least yung may-ari, alam niya paano. Okay? If you're going to borrow and buy your own truck, you have to worry about maintenance, spare parts, etc. That's a hassle. Okay? So leasing is another form of financing. Instead of borrowing money, in leasing, you are borrowing property. In this case, the personal property of a truck. Okay? So leasing is another example of a business finance company. Next, we have accounts receivable financing. So you have a collectible from your customer. Okay? You're going to borrow from the finance company. The finance company will give you a loan. The business finance company can do a setup where there is account receivable financing. Where will you get your payment for the AR? Okay. Where will you go the payment for the loan? You will get it once the AR is going to become collectible. Okay? Accounts receivable financing. In this case, the source of fund for payment of the borrowings will come from a business's accounts receivable. There are many possible things that we can do. We can do terms like pledging or factoring. Pledging, in this case, you make the accounts receivable the collateral. In factoring, you are selling the account receivable. Please excuse me. Give me 30 seconds. Sorry for that. Sorry for that. Okay. So, now, as I've told you, okay, a finance company can cater for businesses rather than individuals. A while ago, we were talking about consumer finance companies where they offer individuals and households loans so that the families, the individuals may buy a car, a home, or an appliance or furniture. Now, we also have finance companies who are catering businesses as their customer. So the customer of a business finance company are the businesses. So if a business would need help in financing its inventory, a floor plan inventory would do. To finance an inventory for a business with the floor of inventory as the collateral. So anong panghahawakan ng finance company? If the business will not pay the finance company, they are going to take away and sell the floor as well as the inventory. If the business would need to borrow in order to have a truck, rather than borrowing money, it's possible to lease truck. You rent the truck. Okay? Borrowing the truck rather than borrowing money to buy a truck. That's sometimes more efficient. Okay? And then the third one, if there is an account receivable, so the businesses are going to collect from a customer, but the customer is not going to pay yet. What they can do is to, number one, use the account receivable as a collateral, okay, promising to pay the finance company when the accounts receivable will be collected. Okay? If it is being used as a collateral, usually it's called pledging. If the accounts receivable are being sold, most of the time, they are actually called factoring. Okay? If you're going to sell the account receivable to turn it into cash, that's factoring. Okay? So these are the types of finance companies according to who the customers are. This is according to who the customers are. Now, it's also possible to classify finance companies on the basis of who the owners are. Who owns the finance company? Who owns the finance company? Okay? Now, if we classify finance companies based on who owns the finance company, the first one is called a captive sales finance company owned by the auto dealer company, usually cars. Captive sales finance companies. Captive sales finance companies. I already mentioned to you a while ago about Toyota Finance. Toyota Finance. So anong gagawin niya? Anong plano niya? Ang gagawin niya, titingnan niya kung sinong bibili ng Toyota. For the people who bought Toyota, they're going to loan them and earn interest from them. A captive sales finance company is one that is owned by the auto dealer companies, usually cars. So you have Toyota as the mother company, the parent company. So the subsidiary would include Toyota Finance and the Toyota car company. I do not know the name. So when someone would buy a Toyota car, they can readily offer Toyota Finance. Sales finance company to cater not only one auto dealer. Now, if you want to loan anyone who's going to buy a car, whether it's Toyota, Honda, Mitsubishi, no? Toyota, Honda, Mitsubishi. Okay? So, sino dito may Honda pala? Sino dito sa inyo may Honda? Okay. Walang may Honda dito, no? Okay, anyway. So, wala palang may Honda. So, what you can do is to go to a sales finance company. A sales finance company is someone or some company who is offering loans not only to Toyota, not only to one auto dealer, but to different kinds of cars. How about a bank subsidiary? Bank subsidiary. A bank subsidiary is a finance company which is owned by a bank. A bank subsidiary is a finance company owned by the bank. Bakit naman ang bangko magmamay-ari ng finance company? Pwede naman yung bangko na lang magpautang, di ba? Is it possible for banks to lend? To grant loans? Pwede naman, no? It's possible for banks to grant loans, no? Lend money to consumers and businesses. However, you can remember that banks are very regulated. Naalala nyo kung gaano kahigpit yung capital adequacy ratio. So, banks, when they want to lend people of lower income, okay, what they do is they buy a finance company. Because a finance company is not as regulated as a bank. So, sabi ng bangko, gusto kong pautangin yung mga taong yan. They are not qualified. Why are they not qualified? Because banks are very regulated. So what will the bank do? They are going to buy a finance company. And they are going to lend to those people through the finance company. What's good about lending to risky people is that you can charge higher interest. You can charge higher interest. Again, a bank subsidiary finance company is one that's owned by a bank. Okay? Finally, there are independent finance companies. They are standalone. They are not part of a automobile manufacturing holding company. They are not part of a bank. So independent finance companies, they stand on their own. So according to who the owners are, types of finance company include captive sales finance company, owned by the auto dealer, usually cars, Toyota Finance. Sales finance company, not only one auto dealer. Bank subsidiary owned by the bank. Independent finance companies who are standing alone. Okay? So, where do finance companies get their funding? Saan kumukuha ng pondo yung finance companies? So, imagine this as the assets of the finance company. They are going to get their funding from liability and equity. So, yan. No? So, the equity of a finance company is usually small. Most of the funds come from liabilities. So, dalawa yan, di ba? Asset is equal to liab plus equity. The assets is the uses of fund. Liabilities and equities are sources of funds. Equity is very small for a finance company. The liabilities of a finance company include, number one, short-term loans. They borrow from another entity for the short term. Also possible, long-term loans. Also possible, long-term loans. So they may also borrow with terms greater than 1 year. So short-term loans, the finance company, in order to lend, they have to borrow. Short-term loans, they borrow for a term less than 1 year. Long-term loans, they would borrow for a term more than 5 years. Now, usually, loans are borrowed from banks, but it's also possible to have commercial papers. A commercial paper is a short-term debt instrument, okay? Only issuable by large companies, stable companies. A commercial paper is a short-term loan or short-term debt issued by only stable large companies. The maximum maturity of a commercial paper is 270 days, and they do not owe them to the banks. Pag commercial paper, they owe it to the public. Anyone can buy a commercial paper so that the company will be indebted to them. So, short-term tsaka long-term, yung mga loans payable, a lot of times, they borrow from the bank. If they do not want to borrow from the bank, they may borrow from anyone in the public. Mas maganda, commercial papers. If they will borrow from the public for the long term, bonds payable. If they borrow from the public with longer terms, bonds payable, no? Bonds payable kapag manghihiram sila sa publiko, long term. Remember, who owns the equity of a finance company? If it is a captive sales company, it is the auto dealer. Okay? It is the auto dealer. So, for captive sales finance company, Toyota Finance, Toyota owns the equity. Okay? For bank subsidiary, edi yung bangko yung may-ari ng equity. Any questions so far? I hope you have any questions. Okay, wala na. I will conclude this discussion with controversies of finance companies. Controversies of finance companies. Now, in 2008, secondary market where issued debt is being sold. Do you remember what the secondary market is? The debt is already issued to an investor and then they are going to sell it again. Okay? So, kunyari, may binili kang utang. When I say may binili kang utang, you bought the debt of someone, meaning it becomes payable to you. If you sell it to someone else, okay, may utang sa'yo, tapos ikaw nagpautang, binenta mo sa iba yung utang para sa kanya na magkakautang yung tao, secondary market yon. Okay? The secondary market is where debt that's already issued, especially loans, are being sold. Now, what happened is that there is a crash in the subprime mortgage. Pag sinabing subprime, that is risky. No? Subprime, that's very risky. Adjustable rate mortgage. Subprime, adjustable rate mortgages. Okay? The ending conclusion was, okay, during that time, that's 2008, those borrowers are actually not capable of paying. The borrowers are not capable of paying. This brought to the bankruptcy of the Lehman Brothers. Is the word familiar to you? Is the name familiar to you? The Lehman Brothers, their subsidiary, the BNC, and the Aurora Loan Services. BNC and the ALS. Okay? So that's the controversy of finance companies. Ay, napanood nyo na yung Big Short, Mr. Domingo. Oo. This is the story of the Big Short. The plan is, next meeting, for those who haven't watched yet, no? Lahat na tayo, no? Everybody, let us watch it. So, by Wednesday, we're going to have film viewing. We will watch the Big Short. We will watch the Big Short. Okay? So, yeah, you're correct. This is indeed The Big Short. Okay? Regulation of finance companies. Regulation of finance companies. Okay. Now, in the Philippines, the BSP has authority over finance companies. The BSP also regulates the finance companies. So, instead of simply supervising banks, the BSP has a broader role here. Okay? You have the following: NBFI, or non-bank financial institutions. The non-bank banks in the Philippines, they are called NBFIs, non-bank financial institutions. NBFIs. Okay? NBFIs, non-bank financial institutions. Okay? An NBFI is categorized into two: investment houses, also known as investment banks, IH, and the FCs, the finance companies, which is what our topic is. I repeat, who regulates the finance company? BSP. BSP has authority over NBFIs. Instead of calling it non-bank banks, it's very awkward to say non-bank banks. They call it the non-bank financial institutions, which includes investment houses or investment banks and finance companies. Regulation of finance companies, the minimum CAR is 10%. The minimum capital adequacy ratio is 10%. Minimum capital adequacy ratio, 10%. Okay? Sige. Who can volunteer here? Sino may Netflix? Sino may Netflix? Sir, do collateralized debt obligation exist here in the PH2? Yeah, meron. Meron din. Wait lang ha. Wait lang ha, I'll stop recording.